Welcome back, friends. Welcome back to the channel. We're jumping up today in crypto. You are probably pretty happy if you did not sell that dip. To see where we're at, we're just sitting just below $100,000, right around 99. So we're going to get into what happened, what's going on, and a few other news stories, as well as look at the charts a little bit today. So yeah, let's just jump right in, guys. So first of all, what we had today and yesterday, what we saw yesterday is we had the PMI economic numbers coming in. It's a manufacturing index number. It kind of shows the strength of the economy and is somewhat linked to inflation, which is what people are really worried about. Inflation and ultimately the Fed cutting interest rates, right? So we saw PMI come in yesterday a little bit soft, meaning, the inflation probably wasn't really going to be an issue. So we saw that yesterday come out, and today we have CPI coming out. CPI came out at 2.9 year on year, right in line with expectations. And we saw month on month CPI come in 0.2% lower than expectations. So this actually beat expectations as far as inflation goes, which is so good, especially for all the people who were worried that the Fed. Some people were saying that instead of having a few more rate cuts this year, we might have rate hikes. And this should kind of ease those fears. I think, like I said in my previous video, I think quantitative tightening at this point for the government is just not an option. With 36 trillion in debt, this is the cycle, the 4-year cycle where they have to roll over that debt, and it's just not likely, in my opinion. Anyways, this goes on. Core CPI came in at 3.2% year on year, which was also lower than estimated. And core CPI month on month was also lower than estimated for CPI. So guys, what we're seeing here is PMI came in yesterday soft, and CPI came in seemingly short of what expectations were, lower than expected. So here's what happened, guys. After the FOMC meeting on the 18th of December, and Jerome Powell's a bit hawkish talk and the Fed's expectations that they weren't going to cut rates as many times as they previously kind of thought they were. After we saw that from Jerome Powell, we saw some strong economic data numbers, namely job numbers came in really hot, adding, I think, 260,000 jobs instead of the expected 150, almost double what was expected. So after that, guys, we saw everybody freaking out, thinking inflation was going to be absolutely atrocious. And we just got confirmation this morning that that really isn't the case. So that's kind of why we're jumping up today. The economy's good, guys. Here's the thing. It's, in my opinion, this is super bullish because, as I've said before, the biggest bear case, in my opinion, is that we go into a recession. So we've seen job numbers come in. We're not going into a recession. According to those numbers, the economy is resilient, but we're also seeing CPI and inflation come in soft. So we've got a situation where we're looking like the economy is strong, and we're looking like inflation is coming down, and the Fed could continue cutting rates. So almost a perfect setup. Both sides are looking good. And everybody, two weeks for maybe the last 3 weeks have just been absolutely losing their minds. And this is why you do not trade on your emotions, especially during this 4-year trend, the 4-year cycle. As far as crypto and Bitcoin goes, this 4-year cycle is the strongest trend we have. So betting against that trend is, just that's pure speculation. If you think the trend could and will eventually break at some point, but until that happens, you're really, really going against the odds on things. So, so there's that, guys. Also, yesterday, what we saw was we had a bit of news as far as Trump and his inauguration. We're going to jump over here. This is from Forbes. It says Bitcoin price surges after leak reveals imminent Trump game changer. 100 trillion predicted. Now, this is kind of talking 100 trillion in market cap, which I believe Bitcoin is right around 1.5 trillion market cap. And this is kind of a stretch. This kind of goes into something that Michael Saylor said about the 3 things needed for Bitcoin to hit 5 million per coin, which would make it $100 trillion market cap. But the point here, guys, is there has been some leaks that Trump actually is prepared to issue 2 executive orders relating to crypto. And what those 2 executive orders are rumored to be are, one, the repeal of SAB 121. So if you guys remember back, I believe August or September, probably August, we saw that Congress completely repealed SAB 121, which is a recommendation. It's not even a law. It's a recommendation from the SEC saying that banks shouldn't hold Bitcoin. And if they do, they should back it up 100% with cash reserves on the other side, which no bank is ever going to do that. So it basically pressured banks into not holding Bitcoin. Now, we saw Congress, like I said, repeal this, but Biden, when it reached his desk, Biden underhanded the entire Congress and said, no, I'm going to veto this for an accounting bulletin, which is just kind of ridiculous unless you're just absolutely out to stifle this innovation, right? So Biden really shot himself in the foot with that. But apparently this executive order is going to come into effect day one, reportedly, and is going to repeal that. So it is good for crypto. But I think first and foremost, this is kind of a banking thing. So it's good for banks. Like, they'll be able to custody Bitcoin, and eventually that's good for the consumer because they can probably, use collateralization take loans against their Bitcoin from big banks and things like that. But first and foremost, this is just a pro-banking kind of thing that does indirectly help the crypto industry. Now, the second executive order on this deals with choke point 2.0. So it's probably something coming out basically telling the Federal Reserve, the FDIC, all of these organizations that were pressuring private banks to unbank crypto companies. So that one is also, it's good for the crypto community. It's going to be good for crypto businesses. But again, this is another executive order that is really first and foremost for the banks. You know, they won't have to deny companies services anymore because the FDIC and the Federal Reserve are pressuring them to do it. So, you know, these are pro-crypto policies, you know, indirectly is what I would say. So it's not as bullish as it could be, but this is a good sign, especially after 4 years of just absolute stifling from the government, you know, just a completely hostile government over the last 4 years that we've seen. This is a good sign. And the fact that it's going to be done reportedly day one really goes a long ways, in my opinion, probably saying that Trump is probably more convicted and more concerned about this industry than even myself thought, if I'm going to be honest. So good news there again also, guys. Now I do want to jump over. There's one more story that just happened today that broke that has to deal with Coinbase and their court case with the SEC. But guys, before I jump over there, I do want to remind you guys, Chicken Butt Microsanctuary. These guys are the sanctuary that I'm kind of spotlighting. I'm trying to help out. If you guys have any amount, you know, a couple dollars really goes a long ways for these guys. They are a very small micro sanctuary. So you can see here they have PayPal, Venmo, and Patreon, all good ways that you can help support these animals. Please go over and help them out. If you don't have anything to give, go over to their Instagram or Facebook and just hit the like button on their page or on a few posts or whatever. That also really helps them out, and it costs you guys nothing. So they are a 501c. So if you do donate anything financially, that is a tax write-off for you as well. So, and we're going to need it, guys. Like we needed it last year, we're going to need it this year even more because this is the third year of the bull run, guys, for Bitcoin. So go over and help these animals out. Very much appreciated on my end. Also, guys, okay, so let's jump over to this court thing with Coinbase. So this is from AP. It says court tells SEC to lay out why it has declined Coinbase's request for crypto regulations. And this is something that the SEC has never been forced to do. You guys remember I reported just a few days ago that Coinbase had won that injunction and kind of delayed this court case until the next administration comes in. But guys, this is even further. This is something the SEC has never wanted to do. You know, Coinbase and Binance and all of these companies that are being sued for not registering with the SEC have been saying, we would love to register, tell us how. And the SEC and Gary Gensler just won't. They won't tell them how, because they don't want them to register. They just want to sue them. It was basically, they wanted to stifle the crypto industry. And that's plain as day now. When Gary Gensler was asked directly, how do these companies, by Congress, by his bosses, when he was asked, how do these guys come in and register, Gary Gensler would never directly answer that question. So now the courts are basically ordering the SEC to lay that out. So super, super good news there. Finally, we might get a bit of clarity right before a new SEC comes in, and it probably won't matter. But anyways, good news for Coinbase, good news for crypto generally there. And yeah, guys, the tailwinds just keep coming. So hang in there, be strong. We're having a good day today. And hopefully that continues. I do want to jump over to the charts really quick and show you guys a few things. So as you can see this morning, right on that CPI release, we jumped up a couple $1,000 right here. But I do want to say, we're still under 100,000. And if I'm completely honest, there's a few levels that I would be concerned with. Let's zoom out all the way to our all-time high, guys. This was our all-time high of 108,000. But if we just draw a trend line right there from that top down through there, this would be a trend line that I would watch, and hopefully we break that in the next few days. If we went straight up right now, that would be right at about 100,000, 100,500. And obviously as time goes on, that kind of goes lower. So if we go out a few days and then break it, it's probably going to be down towards that $99,000 where we're at right now. But that's one trend line that we need to break. The even bigger one, guys, is right around in that area, which is probably that $102,000 mark. Let me just draw a line at 102. Yeah, right about there. So as you can see, guys, right before we shot up into this all-time high, that was kind of the level that we played around with. So we had a lot of confluence right in here at that 102,000. We also had this rejection off that level basically right here before we plunged down to that $89,000 dip that we saw just yesterday. Yeah, yesterday. So was that yesterday? God, I'm getting my days mixed up, guys. Anyways, that $102,000, right around $102,000 is another level that you should really, hopefully we break that this week. That would really kind of confirm that we're going higher. Also, right at that level, the reason that level is so strong in the first place is, guys, if you remember a few months back, I pulled Fibonacci levels, and I'm going to have to jump out to probably the daily to do this again. But let's get zoomed out all the way here. I think, where was the fib level that I pulled? I think it was from that 74 all the way down to where we dipped. Is that right? Nope. So this is actually the even stronger Fibonacci that goes all the way back to the high of 2022. So we pull Fibonacci retracement there. And now we need to zoom back in to where we're at now. Not measure. Let's see, zoom. Why aren't you working for me? Okay, give me a second, guys. Here we go. There we go. Okay, so as you can see, I mean, here's that $102,000 line that I drew. That Fibonacci level, that 1.618 level off that previous cycle high down to our bear market low, that level is right at that point. Almost, exactly. And I didn't put this line exactly at 102,000, but you can see why that level is so important. This dates back to November of 2022. So this is a huge level for us to break. And this, us breaking through that would really, confirm that we're done with this dip and that we're continuing on through this cycle. So those are the two levels I'd kind of watch for in the next few days, guys. Now it could take us a bit longer, but I would hope with all this new optimism around inflation and everything, that could fuel over the next, over Thursday and Friday of this week, that we could possibly break through that. So those are, anyways, guys, that's kind of the stuff I wanted to show you guys in the chart. That's really about all I have for you guys today. But yeah, I will be back Friday again, guys, for a weekly recap. Hopefully we get some more news going on the next day or so, because otherwise it's pretty much going to be a repeat of what I said today. But I am going to do that video. So watch for me on Friday if I don't hop on again tomorrow. And we'll see you guys in the next video. Bye.